Good news for Supermicro investors as the company has successfully completed the filing of its financial statements, ensuring full compliance with all regulatory standards set forth by the authorities. And this achievement marks a pivotal milestone, not only for the company itself, also for its shareholders, as it signals a new chapter characterized by increased stability and enhanced transparency. So in this video, I'll cover a brief history of Supermicro's business model, the recent news announcement, and have a look at the price chart, offer some future growth targets. Supermicro Computer, headquartered in the heart of Silicon Valley, has been a pivotal player in the tech sector since its inception in 1993. And the company specializes in high-performance server and storage systems, catering to a diverse range of markets, including enterprise data centers, cloud computing, artificial intelligence, 5G, and edge computing. Over the years, Supermicro has evolved from a modest tech startup into a global leader, boasting significant manufacturing facilities in Silicon Valley, the Netherlands, and Taiwan. And the company went public back in November 2007, trading on the NASDAQ under the ticker symbol SMCI. And the success of Supermicro can largely be attributed to its innovative business model and extensive product portfolio. The company offers a comprehensive array of server and storage solutions, including barebone systems, complete systems, networking, and storage options. And their modular architectural approach allows for customization and scalability, enabling them to meet the unique needs of each client and ensure optimal performance and efficiency. In addition, Supermicro also is committed to sustainability, focusing on energy-efficient designs and green computing initiatives that appeal to the environmentally friendly client. Despite its strong foundation, Supermicro has recently encountered a series of challenges that have raised concerns among investors. In the past few months, the company has faced delays in the financial filings, a whistleblower lawsuit, and a Department of Justice investigation. A major short seller took a position against the stock, and their auditor, Ernst & Young, resigned, citing disagreements with the company's financial reporting. These issues led to the possibility of a potential delisting from the NASDAQ, further compounding the company's troubles. Institutional investors, often regarded as the smart money in the market, have been exiting their positions in Supermicro at an alarming rate. Over the past 6 months, the number of shares held by institutions has dropped from 334 million to just 23 million, a staggering 91% decrease. And NVIDIA, one of Supermicro's largest customers, has also played a significant role in the company's recent struggles. Due to Supermicro's financial reporting issues, NVIDIA has begun moving orders to other suppliers, aiming to stabilize the AI server supply chain. And this loss of a major client like NVIDIA could significantly impact Supermicro's revenues, adding to the financial pressure amid ongoing challenges. Meanwhile, competitors like Gigabyte and ASRock are securing new contracts from Supermicro's displaced orders, boosting their revenue forecasts and expanding into liquid cooling solution to support NVIDIA's growing demand. However, there's now good news for Supermicro investors, as the company has now successfully completed the filing of its financial statements, ensuring full compliance with all regulatory standards set forth by the authorities. On the crucial date of February 25th, 2025, Supermicro met its SEC filing deadline without the need to amend any previously submitted financial statements. This development was a significant relief, especially given past delays and lingering questions about the accuracy and transparency of their reports. So the news release reads as follows. Supermicro announced that on February 25th, 2025, it received a notification letter from the NASDAQ indicating that it now complies with the NASDAQ listing rule 5250, which requires timely filing of reports with the US SEC. and they consider the matter now closed. So, with the Nasdaq now confirming the company's compliance, a major cloud of uncertainty has now been lifted, allowing for renewed confidence among investors and stakeholders. So, with these pressing issues now resolved, Supermicro can redirect its focus towards implementing its ambitious growth strategy, including investing heavily in its workforce, operational processes, engineering advancements, and of course, sales efforts. Operating within a rapidly expanding business sector, Supermicro is particularly well positioned with its innovative liquid cooling solutions for data centers. These solutions are critical for managing the substantial power demands generated by accelerated computing platforms, such as those sold by NVIDIA. This strategy allows Supermicro to capitalize on emerging opportunities and drive future growth. And following this important announcement, you may have expected Supermicro stock to rally somewhat. It actually fell around 10% on the announcement day. There was a brief increase to the high of $56 the next day, only for price to fall away to the low of $34 on March the 4th, closing back up at $39. Now, looking at the bigger picture, Supermicro did have a strong start in 2024, rising by a huge 345% from January to the peak of $122 in March. Since the peak in March, the share price has been in a downtrend, falling by 86% into the $17 low during November last year. The next 4 weeks were bullish for Supermicro, with buyers coming back in, pushing up the share price to $48 in December. And price then pulled back into the $25 low in February this year, before a 2-week rally saw the price rise to the most recent peak of $66, which was 2 weeks ago. Currently, Supermicro is sitting at $39, with a recent low of $34, possibly creating short-term support, based on the previous peak back in August 2023. So, where could Supermicro head next? Based on the weekly price action, if support holds at $34, the next possible level of resistance would be the recent peak of $48 back in December 2024. So a short-term trade from the support level of $34 to this target would reward speculators with a good profit of 40%. If Supermicro breaks the $48 level, the next target could be the recent February peak of $66, which also created support back in April 2024. And a short-term trade would offer a 92% gain from the $34 level, a great potential return, but with some risk. And for more confidence that Supermicro is changing direction, we can confirm a trendline break in the last few weeks, suggesting a reversal may be on the horizon. With the formation of 2 higher lows since the $17 low in November, these are indicators that Supermicro is trying to form a short-term uptrend. However, this stock is volatile and price can go down just as quick. Supermicro can easily do 40% in 1 week in either direction, so there is high risk here if you are trading short-term, and trades may be better managed on the daily chart, with tight risk management being essential. For investors, considering the stock volatility and recent news, entry above $66, which is the peak in February, may be the best option. An entry here would offer a strong 85% return to the all-time high of $122. If you've enjoyed my summary of Supermicro, subscribe to the channel for more videos on technical analysis and price forecasts. And if you're considering NVIDIA for a long-term buy and hold, check out this video here, where I cover 10 reasons to buy. See you there.